Hey friends, Lucian here with the Bullish Bears team, and I wanted to make this video on why people use options. Again, it's a strategy that it's a matter of preference. There's people out there that just like to trade stocks, right? So they buy a stock and they'll decide whether they're going to day trade it, swing trade it, or hold it long term. Now, that's great. You own shares of a company within that stock, and you can hold them as long as you want. You decide when you sell them, and you never lose money technically until you go to sell that stock. So you can hold that stock forever. But ideally, you want to hold that stock and sell it for a profit. But until you sell that stock, you don't technically lose money on it. But again, you're a shareholder within a company. Now, the downfall to that is when the market goes down or trades sideways, you don't make money. You actually lose money when your stock falls and the market goes down, or when the market trades sideways or your stock trades sideways, your stock will go flat. So you can't make money when the market goes down or trades sideways with a stock. And that's where options come in, where options allow you to make money in any market. So when the market goes up, down, or trades sideways, you can make money. Now, how does it work exactly? Well, with options, there's two main reasons why people will do option. They'll invest in options because of speculation. So they're betting on the movement of a security. So they're going to bet whether the stock goes up, down, or trades sideways. Now, you never want to bet, first of all, in the stock market. You never want to just guess. You always want to make sure you're doing your proper technical and fundamental analysis before you buy any stocks or options. So always, always, always do your proper research first. And you can never predict the direction of a stock 100%. It's impossible to do. But you can put the odds in your favor by always doing the proper fundamental and technical analysis. So now once you've decided the direction of a stock as best as you can by putting the odds in your favor, now you would enter, there's still speculation, and that's where options come in. Whereas with that stock, if you believe the stock's going down, you're not going to want to buy shares of a stock because then you're just going to lose money. But with an option, you can make money. If you bet the stock's going to go down and you have an option with a put, what they call a put means that you believe the stock's going to go down compared to a call, which means you believe that it's going to go up. Well, you could buy a put option and put your option to somebody else for a higher price if the stock falls. So you can make money when the stock falls with options, where you can't do that with a stock unless you do something called shorting. Shorting is a whole other type of technique. It's a little bit more, or it can be a lot more risky than options, because there's really no cap to your losses, where you could buy a stock. Let's say you're buying ABC company for $10 and you believe it's going to fall a couple dollars shorting. Well, that stock could go against you and go up to $100, $200, $500. You never know. Some crazy news can come out, and then you could be owing your broker massive amounts of money. Whereas with a put, with an option, the worst thing that would happen is you would lose all of your options contract, or the premium that you entered into with somebody else. So the worst thing that would happen if you closed out your position is you would just lose the money or the premium that you paid for your contract. So a put is safer than shorting. But again, you could lose money really quickly on your options depending on what direction it goes in. That's why proper fundamental and technical analysis is key. So speculation is one of the two main reasons why people enter into options. They want to bet that the stock is going to go up or go down, and it allows people to trade big name companies for cheap or inexpensive. Meaning, so like if you wanted to trade Apple or Facebook or Amazon or Google, rather than spending 10, 20, 30, 40, $50,000 to buy 100 shares, depending on which one you go with, you can control those big name companies for a fraction of the cost by entering into an agreement with somebody. Again, an option is the right but not the obligation to purchase those shares. Somebody owns those shares on the planet, and they're going to agree to sell them to you for a specific strike price down the road. You decide when you entered into that agreement whether you at some point want to exercise that contract and own those shares of Facebook or Apple or Google, or you can take that option contract and sell it to somebody else, ideally for a profit. So you can buy and sell buy your options contract and sell the contract to somebody else, or you can exercise your option and own those shares. So it's up to you. But again, you can make money when the market goes up, down, or trade sideways with options. So that's how speculation goes. Again, you never want to just do it. You never want to just purchase options without doing your proper research. The other reason why people will go into options is hedging. So, if you, let's say you own a position of, Facebook or Apple or Google, but you believe, it might drop, or it might have a minor correction, you can buy an option to kind of, where, let's say you didn't want to sell your shares of your stock and you kind of wanted to make money on a dip or a minor correction. Well, you could you could buy an option and protect that, your stock, so you can make money if it dips a little bit. So let's say you own Facebook and you own the shares and you believe it's going to fall by a little bit, you might buy a put option on Facebook to protect your shares. So when it corrects a little bit, you're holding on to your shares of Facebook, but you're making money on, the put, meaning you believe it's going to drop a little bit. You're going to make some money on that options contract to kind of offset any losses you might make until Facebook corrects and goes up again. It's all a matter of strategy. If you are a trader, you might be a long-term trader, and that's why you don't want to get rid of your shares. Some people are swing traders and they don't want to lose money at all. And so when the stock dips, they might have a stop loss or sell at a certain amount to protect those losses. But again, it's all a matter of preference, not that one way is right or the other. Hedging is just, something people do with options to protect their stocks because they don't want to get rid of their shares. So it's a matter of, the two main reasons for, entering into options is to either speculate or to hedge. And again, one of the biggest reasons is people want to be able to make money when the market goes up, down, or trade sideways with options, and they don't want to put a lot of capital out to do it. So they don't want to buy, let's say Apple is trading at $100 and they wanted to buy 100 shares of Apple. They don't want to spend $10,000 to do that. Most people don't have that money to invest, so they'll buy an option, which is just a fraction of that cost. And they can, again, decide to exercise that option down the road and own those shares of Apple, or they can take that contract and just sell it to somebody else. And so literally you can buy and sell major companies in the stock market for a fraction of the cost with options. So yes, options are risky if you're not doing your proper technical and fundamental analysis. So if you need more help or training on options, feel free to head to our website, bullishbears.com, and take our free options course, where we really teach you the basics of options and help you to understand them. We also have a free stock course over there as well that teaches you the basics of fundamental and technical analysis. So basically you can take our couple free courses and just really get yourself a solid foundation on learning how to do proper technical and fundamental analysis, where we'll also show you how to learn how to do options as well, and kind of really help you on both sides of things so you can enter and figure out what trading strategy is best for you. Are you a stock person or are you an options person? If you want to do options, we try to help you and empower you by giving you that training without